On the last trading session of Friday, gold spot printed a closing price little above $1,797 per ounce. Numbers rounded and the market is closed. And on the last week, gold traded as low as $1,752 per ounce and as high as $1,814 per ounce. Gold, technically, in my point of view, is still in a correction. What we have seen is just a swing high, but though of that, we are trading above all the daily simple moving averages as of now, which I believe it will not be a sustainable move. Now, for the RSI readings, it's moderate and bullish in all the charts from the daily till the monthly chart, and for the support levels, it's located at 1791, then 1780, then 1750, and the resistance levels are located at 1815, 1829, and 1833. The pivot on the weekly chart at 1787. This could be a good area for buying the dip, and at 1802 on the daily chart. That's all for the numbers. We'll move on now to the economic calendar. On the economic calendar for the coming week, we're waiting for the following economic headers: the GDP, the existing home sales, the CB consumer confidence to be released on Wednesday, then PCE price index and durable goods orders on Thursday, and Friday it will be a holiday in the United States and most of the European countries. And that's all for the economic calendar. We'll move on now to the strategy. Hi again, it's always nice to meet you in a new episode of our gold price weekly forecast. Gold today. If you are new for this video, just let me guide you how things works here. We are going to start with a quick recap of our last video, then we will move on to a quick examination of the US dollar charts, and then we will look at the gold chart and we will arrive at a conclusion on the last video. On the last week, we've been like looking for gold to rally toward 1810 to 1820, as I said in my last video. Actually, I wasn't so much concerned about buying setups as much as of a selling setup, and we've got that opportunity, and we have seen two sales off in the past week, one from 1815 and one at the beginning of the week from it's almost 1790 up to 1750, and we are positioned in a sell position as of now. Now, moving on to the US dollar chart, in my belief, and as I've been saying in my past few videos, or actually for more than 2 months, I've been saying this about the US dollar, that the US dollar is a reserve currency. It's a firm currency, and when it's breaking out, the breakout is going to be massive, and it's going to be sustainable somehow until it arrives at the final target, which I do believe is somehow at 102 in terms of DXY, and I see this breakout is moving faster in the coming few weeks. Now, moving on to the gold chart. Now, on the gold chart, despite of this candle, we are now viewing the weekly chart of gold. Despite of the last candle, which is a bullish candle, gold is still trading below the falling trend line, and as I said in the past video, there is an evening star on the chart, which will present somehow some sort of resistance when if the market reaches nearby this level, a resistance that I don't think gold will be able to trade above this evening star. However, in my belief, I think what we have seen in the last week was simply because the news was extremely against gold. The Fed said clearly that they are going to accelerate their bond purchasing program. I mean, to end this quantitative easing as on a faster pace, and they said they're planning to hike the interest rate 3 times in the year 2022. This is very bad news for gold. When you're talking about a rate hike, each rate hike means $100 less in the price of gold, which means simply gold should be, if there is a 3 rate hikes, gold will be trading about maybe 1500 or a little less if this takes place. And now this is normal. If you go back to the charts in 2011, the same thing happened when the Federal Reserve Bank started to hike the rates. Gold, when they announced that they want to hike the rates, gold rallied a bit, but then a massive sell-off started to take place. Now the price of gold could stay elevated because, as I said, there is a tension between Russia and Ukraine, and there is also the evolvement of this new variant of COVID, uh, which is putting pressure on the stocks. So gold as a safe haven we could see some sort of flight for safety. But I do believe that market of gold. Personally, I believe that market of gold has already topped. We have seen the top or max to max 1830, which means simply it's an area for shorting gold with a target of 1680. That's all for our video for this week, and thank you guys for watching. Please share, like, and subscribe, and see you next week in another video.